Public and private home prices rose at a faster pace in the second quarter than the previous quarter. Analysts say a lack of new property launches has kept prices elevated. They expect home prices to keep climbing for the rest of the year because of demand. As Michelle Teo reports, home buyers are also not deterred by rising interest rates.
A 5-room resale flat in Clementi now costs $900,000. Earlier in the year, it would have been $703,000. That's how much public housing resale prices have been climbing for the past 9 quarters. While it's already up by more than 5% this year, analysts expect it to rise even more.
Demand for homes is still strong, and then the available supply is still not picking up as fast as we would like it to be. So naturally, there is still some gap over there. So that should actually help to keep the prices on an upward trend for the rest of 2022.
While home prices have picked up, there are signs the resale market is slowing down. Transaction volumes fell 1.7% in the last quarter, and with 23,000 new built-to-order flats launching this year, potential home buyers may not be keen on resale flats.
The increased BTO supply will continue to draw some demand away from the resale market. This will in turn regulate the pace of price growth for resale flats and tame market exuberance to some extent.
Private home prices have also increased. Non-landed homes jumped the most, especially those in the rest of Central region like Queenstown, Katong and Bishan. The number of units sold surged by more than a quarter, from more than 5,300 units in Q1 to some 6,800 in Q2. That's despite interest rates doubling from April to June. Even with more rate hikes on the horizon, one analyst says it's unlikely to dampen buyer sentiment.
There is ample liquidity in the market. That's why the change in interest rate do not really have a significant impact on people's decision to actually buy a property. They could use full cash, or they could use more cash instead of loan to actually finance their purchase.
One analyst says foreign buyers are also driving the private market. Data from the Urban Redevelopment Authority shows non-landed homes, excluding executive condos bought by foreigners, doubled in the last quarter. Observers say it's a sign that cooling measures made little impact on investor sentiment.
Especially since the geopolitical and economic uncertainties are surrounding other Asian countries. So Singapore may emerge as their top investment destination. And the other factor could also be because we are one of the earliest nations to transit smoothly into endemic living. So this gives foreign investors a lot of confidence to park their money in Singapore.
For the full year, analysts expect some 8,000 to 9,000 private homes to be transacted. Prices could also increase between 5 and 8%.